Welcome back, tribe soldiers. Today I will be showing you a simple trading strategy that can make anyone profitable in trading. It does not matter either you are a beginner or a pro trader. This strategy will elevate your trading game and help in bringing more profits to your trading account. You could have lost a lot while trading, but this will be the major breakthrough for you. It's a very simple strategy and easy to understand, but if at all you have a question as you watch, do well to drop them in the comment section, as I will be there to answer them all. Now let's get to it. In this strategy, we are going to be using two trading tools, an indicator and a strong entry candlestick. The indicator we will be using for this strategy is the 100 exponential moving average. This exponential moving average is very powerful, as it smooths out the market movements in order to give us a clear direction to enter the market from. And that is what we are going to be working with. Our entry candlestick is the pin bar candlestick, and as we are going through the examples, I will be showing you the different forms of it. Get your mind ready and be at alert, because each part of this video is as important as every other part of the video. So watch carefully with full attention, so you don't miss out on crucial informations. In order to add the 100 exponential moving average to your chart on TradingView, go to the FX icon and type moving average exponential on the search box, and this will appear at a default settings of length 9. Change it to 100 and save it, and there you have your 100 exponential moving average. It's more easier on MetaTrader 5. All you have to do is click on the indicator icon and select moving average from the list. Make sure to set it to exponential and the length at 100. And then you will have a 100 exponential moving average on your chart. And after that being done, you are all good to use this indicator. And this is how we are going to be using this indicator. But first, you have to understand how a moving average really works. A moving average helps to smooth out a trend of an asset when the price is moving above the moving average. It is considered to be an uptrend, and when the price is moving below a moving average, the market is considered to be in a downtrend. When the price moves from the top of the moving average to the bottom or below the moving average, traders are looking out for a change of trend from uptrend to downtrend. And when there is a price movement from below the moving average to the top of the moving average, we traders are looking out for a change of trend from the downtrend to a new uptrend. Though sometimes the market can move like this and create uncertainty in the minds of traders, and that's when the concepts of this strategy comes in place to filter out the noise and give a clear trading move, so that it can be easy and less stressful to understand. Now listen, there are two rules that apply to the 100 exponential moving average according to this strategy. Number 1. The market must move more higher from the moving average line if you are targeting an uptrend, and it must move more lower from the 100 EMA line if you are targeting a downtrend, meaning that you cannot take a small price move like this on the EMA line, because it's more likely to return to the former trending position, which in this case will be a downtrend. But if you see price moving higher like this, there are more chances for it to return to the EMA and continue moving the price upwards. The same thing goes for a downtrend. It will help to keep moving the market downwards in the trend direction. Now that we know that, let's move to the second rule. The second rule states that the market must touch the 100 exponential moving average line for confirmation before we look for an entry candlestick. This way we can be more certain and clear. There are always many near misses above or below the 100 exponential moving average that can be so distracting, and trading it will be like you are shadow boxing, which will lead to a lot of losses. To avoid this, you must always wait for price to return and touch the 100 exponential moving average line before you expect an entry candle. Now, when all that have been done, the next thing to look out for is an entry candlestick, and like I discussed earlier, the candlestick we will be using for this strategy is the pin bar. The pin bar comes with a kind of decline that shows us where exactly the market is pushing the price to. Don't be confused about a pin bar. Here is a pro tip. A pin bar is a candlestick that the body is less than half of the overall candle height, and has a little to no wicks at the top of it, or at the bottom for a bearish pin bar. It can be confusing at first, but as time goes on it becomes clearer. Each time you are in an uptrend, you are only looking for a bullish pin bar with the green color, and when you are in a downtrend, you are only looking for a bearish pin bar with the red color, or in those colors which you use to represent bullish and bearish candles on your chart. You should care less about any other pin bar that is not representing the target trend direction color. So right here you can see that we have a bullish pin bar, and after that the market soared high. And here is the interesting part. We are also going to be using the pin bar to get our stop loss level. I will show you now and in other examples that I will be showing you later. To do that, you have to draw out a box on the full height of the pin bar, and anywhere the box stops becomes the total length of our stop loss. And to get that, we place our box below the pin bar, and that becomes the level where we place our stop loss. Our take profit target will be placed at the next high, and that will be a very beautiful risk management, giving us more profits and less loss. Now let's take a few examples before I give you some more pro informations about this strategy. So in this trade, you can clearly see that the market is currently in an uptrend, because it's clearly moving above the 100 exponential moving average. And if you notice well, see that there is a good gap of height between the market price and the 100 exponential moving average. So therefore, we are going to look out for what the market has in stock for us, and to see if we can trade this market. Now let's see if the market will touch the 100 EMA, and how the market will respond to it when it touches it. And now, here you can see that the market has touched the 100 EMA. And sitting there at the line is a pin bar, our entry candle. And when that appears, we draft out our risk management plan, and then wait for the price to take off from there. And from the previous instructions, I told you all we are going to find our stop loss level by drawing a box on the pin bar. And so we draw it, and after that we place the box below it and mark the stop loss level. And then we place the take profit level at the next high. Something like this. Everything is complete. So we take the trade, and here is the result. Our take profit level was matched successfully. Imagine how many pips you will make from this trade alone. And you watched carefully how we just followed the rules step by step without skipping anyone. Okay, that is what we are going to do in this second example. So here we have the market in an uptrend, and like the first one, it is moving above the 100 exponential moving average, which is a good confirmation of the trend. And there is also a good gap between the market and the EMA line. Very good. So now we wait for the price return to the EMA line, which it did. But when you look closely, see that the 100 exponential moving average line was not touched by the market, which means the return is invalid. So we wait for the price to finally touch the 100 exponential moving average lines, which it finally did here. Great. Now here you can see a big bullish pin bar formed at the 100 exponential moving average line. And you know the next step. It's time to take the trade. So we draw out the height of the pin bar and place it below the pin bar. And from there we mark our stop loss level, placing the take profit target at the next high. And then we take our trade from there. This way we can have a trade to remember. And finally, here is the result of the trade. The take profit target got hitted successfully. And watch out. If you follow the steps that I have shown you carefully, you will keep getting a lot of successful trades like this one, in a very easy and less stressful way. And now I will show you another example, before I reveal something to you. Here we are in a downtrend, because the market is moving below the 100 exponential moving average. And here you can see we have a good space between the market and the 100 exponential moving average line. So we wait for the market to return to the 100 exponential moving average line, which you can see here. And after that we expect to see a pin bar. And here we have very good bearish pin bar formed on the exponential moving average line, giving us a go ahead to take the trade. And from there we draw out the box on it to get the height, which we place above the pin bar to mark the stop loss level. and we place our take profit target at the next low, and after that we execute the trade. So here you can see that it was a successful sell trade, as the take profit target was hitted successfully. Another big one. But hey, take note. You must not move or shift your stop loss level or the take profit level at any point when you are already in the trade. Once you are in it, there's no going back. It's either the market hits your take profit target or it hits your stop loss. One of them will be hitted successfully. But if you follow the steps, instructions and rules which I have showed you in this video, it will make you big bags as soon as you master it with practice on your demo account. Make sure you take your time to reflect and practice them, so you can really benefit from it. This strategy works for day trading and swing trading, but if you want to scalp the market using the moving average, I made a video on how to grow small accounts fast by scalping with a moving average strategy. My name is the Trading Chief, and it's a wrap for this video. See you in the next one.